Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The bearish mood increased for the Australian dollar overnight after the RBA, as widely expected on Tuesday, left its base lending rate unchanged at 4.35% in December. In their policy statement, the RBA highlighted that the October monthly CPI indicated a continued inflation moderation and would require more economic signals before considering any further adjustments to monetary policy. Also in other data, better than expected data show that business activity in China grew faster after the Caixin China Services PMI released in November. Along with that, the dollar index, which measures the greenback strength against a basket of six major currencies, rebounded slightly further to 103.86. However, given that the dovish stance by the US Federal Reserve should limit further US dollar gains, as many reports suggest a rate cut by mid-2024, while other reports are pricing in possibility of the first rate cut as early as March 2024. Meanwhile, ahead, we've still got the non-farm payrolls, and also we have the release of the US ADP employment report. The non-farm payrolls should gauge the Fed's likely interest rate path, with the forecast holding around 150,000 jobs added and the unemployment rate seen at 3.9%. So looking at the Australian dollar, as the support holds, and I believe should, around 65.20.45, the current rebound could actually see a clearance of 66 cents and on towards the objective, which I'm still holding at 67 cents, and reassess from there. Looking at the euro, the market's still weak given that the US dollar has edged up, but now getting close towards this key support area seen at 107.2025. I do feel as we get closer towards this level could actually see a strong bounce or heavy ambush by the bulls, and therefore look back towards the 110, 111 call which I had last week. So let's see if the market does hesitate towards the downside and rebound as previously seen in this trend line. Dollar yen still maintaining a weak play into its recovery, and therefore I feel from 147.5 to 65 a rejection from there, and eventually look down towards the region of 146, and the objective holding at 144.5 to 144.80. Sterling likely to show a little bit more strength as the market now seems to be stabilizing, and therefore could see a rise back to 126.25, and with the objective above seen around 127.15 to 70 as a potential trajectory in where the market stands. Moving on to gold, well, since the blow off top and along with that with the outside range day now waits confirmation. We nearly got it overnight but didn't take out the level of 2007. Keep an eye on that level because a break would give further scope towards the downside and bring in a target of 1,968 to 69. But we do need to see this break of 2007 to confirm the bearishness and also this negative signal and a blow off top, of course. Any rises looks towards 24 to 2031, but I don't really have a strong view on the top side given that the recent whipsaw price action can extend quite aggressively. So I'd rather sit out and wait for the break to support a trade. Moving back to oil, well, the market is still a little bit to the softer side and now finding support as a potential base of $70.2045. As we get closer towards this region, we could see a bounce or an aggressive bounce back towards the region of 77.2050. So I'm not getting too bearish at the bottom of the range, and a correction is very much due. Well, that's a wrap. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.